Whoa, good afternoon. Good afternoon, everyone. Welcome to the session today. Welcome to the session today. It's going to be an amazing time, an extremely amazing time. We will be having an extremely amazing time today. Welcome, everyone. Welcome to the chat. Welcome to today's live session where we'll be discussing about how to build a structured and profitable real estate investment portfolio in 2026. The year is just starting, and it's important that we discuss these things to be able to get things right, to be able to put our structures in place ahead of the year and all that. Um, if you don't plan very well, my pastor will say, if you don't plan very well, you're already planning to fail. And I believe this is a very common balance that if you don't plan, you're already planning to fail. And as the year is starting out, it's very, very important that we do things in the right direction, in the right way, and all of that. I want to say a very big welcome to every one of you here today. You can type out in the chat box where you're joining in from. If you're joining from Lagos, Abuja, the UK, Germany, wherever you're joining in from, you can type it in the chat box and say this is where I'm joining the session from as we take it up from there, because today's session is going to be powerful. And while we are also waiting for other persons to join the session, I'd like for us to share with as many persons as possible. Share with 10 persons, share with 20 persons, share it with 30 persons. Repost on your status, repost on your WhatsApp, on your Instagram story. Share it to as many persons as possible so that they can be aware and then join in the session, because we're live already and we will be discussing something very, very important, a topic very, very important for every single individual who has either invested in real estate or have interest in investing in real estate. So I'd like for us to share this, share the meeting, the session link with as many persons as possible on our Instagram story, WhatsApp, wherever. Let's share it and get a lot of persons on board today. Let's get as many persons on board today. You're welcome. Okay, I can see knowing the Lord said, so good to hear. Awesome. Good to have you here as well. I can see my very own friend Bemi Sola. You're welcome. Thank you for that comment. Um, awesome. Good to be here. Let's share the meeting link with as many persons as possible. With 2 persons, 3 persons, 4 persons, 5 persons. Let's get as many persons as we can to join in the session. Important information like this, we most likely don't get a lot of persons joining in. You get important things like this, most persons don't really get to know about this information. But if it's gist and aproko and all those kind of things, you will see that a lot of persons will get that information and they will be gathered. But where important things are discussed, you just see a few persons. But regardless of that whatsoever, I know we know people that will be interested in getting this valuable information that will be shared here today. So I want us to get as many persons as possible to join in the session. For those of us that are just seeing me, my name is Abel Victor Timipamo-owei. I'm a real estate investment expert with over 5 years of experience helping individuals, corporate entities, raising funds for corporate businesses, and also growing SMEs and small businesses to the next level. I've over my 5 years of experience, I've helped a whole lot of persons invest. Over 150 persons here invest in real estate profitably. Emphasis on profitably, because that's what we do here. We don't just say come and buy land, we don't just say come and buy property, but we help you invest in real estate in the right direction. Now we get to sit down with you, we discuss with you, understand what you want, and then provide the requisite investment strategy for you. We don't just say this is what you should do, but we sit with you, have a conversation with you to understand what you want before profiling the right real estate solution to you. So I really want to say a very big welcome to everyone. Toyosi is saying hello, welcome Toyosi. Good to have you. Good to have you here. You're welcome Toyosi. So we are also expecting other persons to join in the session. So let's, like I mentioned before, I think before Toyosi joined in, I asked that we should share the meeting link with as many persons as possible. 4 persons, 5 persons, 6 persons. Let's share the meeting link so as many persons who are privileged to get this information, we get the right information and then do make good use of it as we start out the year. Now, there is something important I also want to mention. Information, getting knowledge is not just enough. Getting knowledge is not just enough. Making use of the knowledge that you've gotten is even the bigger deal in the whole scenario. You understand? Okay, Toyosi is asking, can I bring a prospective client? Of course, yes, you can invite clients. As a matter of fact, this session is meant for both clients, realtors, people looking at investing in real estate, people who have invested in real estate before. You are expected to bring as many persons on board to the session. If you have family members you've discussed with about real estate before and they've not answered you, you can bring them on board, right? Because when they get knowledge like this, it will help them with their decision process. So you can bring as many persons as you want on board. If you can hear me, can I please get a likes or a thumbs up from your end so I know I'm not talking to myself? If you can hear me from your end, let me see a like, a thumbs up, or a chat, a comment in the chat that I can hear you. Awesome, awesome. I can see that. I can see that. Thank you so much. Thank you, thank you. I can see that. So I was saying something before I answered Toyosi's question. Now, it is very very important to understand that the knowledge that you have, you implement it, right? It's not just about getting the knowledge and doing nothing with it, but when you get that knowledge, you implement that knowledge to the fullest. Now, I understand that not everybody really knows how to apply. Okay, thank you, Toyosi. I got that. Now, not everybody really knows how to apply the knowledge that they've gotten. That's why you have professionals and occasions like this where you can get full guidance. Even if it's not full guidance, at least you can get some sort of guidance on how you can implement the knowledge that you will be getting. I want to start exactly 10 minutes into the session while we are still waiting for other persons to join. Now, if you've joined the call already and you've shared this meeting link, let me see you indicate probably in the chat that I've shared it with 10 persons. If you've shared it with 10 persons, let me see you type I've shared with 10 persons. If you shared with 5 persons, let me see you type it out. I've shared the meeting link. Come on, let's do that. Let's do that. If you've shared it, let me see you type it out or indicate with an emoji or something that I've shared it, because we want to get as many persons as possible to join in the session, as many persons as possible to join the session. Awesome. I can see my very own bro, Smart. Awesome. Glad to have you on the session as well. Glad to have you on the session. You're welcome. Let's invite as many persons. I can see Favor as well. I can see Ruth. Good to have you. You're welcome. You're welcome. You're welcome. Awesome. Toyosi said he's still sharing. Glad. That's great. That's great. That's great. Let's share to your WhatsApp statuses, share on your Instagram story, share um on your Snap stories, on your Facebook stories, wherever you know that you have quality people who need this information to join. Come on, let's share it and all that. I'm doing that as well from my own end. Great. So today we are talking about how to build a structured and profitable real estate investment. Now, it's important to understand, or it's important to know, that profitable real estate investments differ to different persons. Now, real estate investment structures really differs to different persons. And I'd like to also mention to you that if you're investing in real estate just to own property, that's a very big sign that you're already losing money. You understand? If you're investing in real estate just with the idea of wanting to own property, you're already losing out money, because of course you could just go to the village. You understand? You could just go to your village and buy property there. You could just go to maybe your city and buy property there. That is also that's also an avenue of owning property, right? But if that is the major core, or if that's your core reason of owning property, then you may most likely be already losing out on the value you're supposed to be getting from that property. Now, if you own a land or a house, and that land or house is not bringing you money, let's say probably every month, most likely that property is idle. And idle assets are quietly stealing or draining your wealth. any asset you have any asset you have that does not have prospect and is idle is quietly draining the amount of wealth that you should be having. Why am I saying this? Too many people buy property without thinking about earning. A lot of people buy properties without thinking of earning, and that's where people get it wrong. When you buy property, you buy it with the intention of earning as well. You buy it with the intention of earning. I'm not here to give you theories. I'm here to give you practicals. We are here to discuss practicals, and every single practical that we'll be discussing here today are implementable. And I want to believe that immediately after the session, you'll be able to start implementing those things. Now, today we are going to be shifting that mindset from just earning property to the mindset of portfolio thinking, because that's how the wealthy people move. That's how the wealthy minded persons move. They move with the mindset of portfolio. You understand? They move with the mindset of portfolio. So, where every property must earn, grow, and contribute to your financial system. Because, of course, who doesn't want to make money in this life? Every single person we know wants to make money. Every individual we know wants to make money. But in scenarios where you have a property, your property is supposed to be an asset. If that asset is not giving you money, it means that it is a liability, is an idle property. And anything that is idle, in a matter of time, is going to drain your wealth. You understand? So we are going to be shifting that mindset from just owning properties to actually building portfolios that are profitable when it comes to real estate investment. Now, in the course of our training, I know a lot of persons are going to be this is practically about real estate and all that, but it's understand that our conversations here are centered practically around real estate. Our conversations here are centered practically around real estate. I know some persons will be expecting me to talk about um, stocks market, the FX market, and all that. Of course, I can make reference to all of those other part of investments, right? I'll make reference to those other part of the invest, but it is very, very important to understand that the core part of our conversation here today is going to be centered around real estate. And I want us to understand that very well. For people who are new to real estate basically is land, house, or anything that is seated on planet Earth. Whatever it is that is on planet Earth is real estate. Now, a lot of people cannot do without real estate in this life. Let me give us practical example. The oil and gas sector needs land for them to build their structures, for them to operate, right? Now we have the banking sector. The banking sector even has a lot to do with real estate because their products, their property is actually real estate. Now we also have which other sector again? Can I mention the maritime? If you're saying it's just land, how about maritime? Maritime also is real estate. So whatever it is on planet Earth is real estate. Either it's a tree that's just planted on it, or you have other things on it. It is actually real estate. And it's important that you understand the power of real estate. It's important that you understand the power of real estate. When God was creating the heavens and the earth, one of my role models will always say that God is a real estate developer. One of my role models will say God is a real estate developer because in the beginning he separated the waters from the earth, and then he asked he did a lot of constructions, a lot of developments in planet Earth, right? So that's to tell you how important real estate is to every single person you see on planet Earth. People need houses to live in. People need the transportation sector needs road to for people to move on to their destination. So without all of these things, without real estate, there will be no existence of any other sector. But real estate is the core sector that every single person needs in this life. Now, I was discussing with my friend some days ago where we were discussing about the most important things or the most important sectors of any country. And we got to establish that there are three major sectors to cover. Now we have the real estate, we have the land and housing. That's number one sector. The second sector is transportation. And then the third sector is food, which is agriculture. Now, without the first one, which is housing, you won't have opportunity to be able to get the remaining two, which is transportation and food, because these three core sectors forms the basis of every other sector that we have on planet Earth. These three sectors, because these are sectors that people cannot do without. These are sectors that individuals cannot do without. People cannot do without living in a house or having somewhere shelter over their roof. People cannot do without going out in a day, because every single time people wants to go out to meet with other people and things like that. If you want to go to your workplace, you would need transportation, right? So people can't do without transportation. Another sector is food, agricultural sector. People cannot do without agriculture. And of course, tell me, what can you do when there is no food? You understand? I think there is a particular riddle that says, if you don't take me, you will die, or be something like that. And that's food. If you don't take food for a long period, okay, I believe that's water. You can stay without food, but if you don't take water for a particular period of time, you start suffocating and things like that. But regardless, it's still part of the things that serves as a basis for what helps you stay healthy, right? So these three core sectors are very, very important, paramount sectors that every individual needs. Now, as a strategic investor, if you are able to invest in any of these three sectors, If you're able to invest in any of these three sectors, you are putting yourself or you are positioning yourself in place of authority for other persons to meet. Now look at the billionaires that we have today. Do you think they are just investing in these sectors just because they want to invest? People, billionaires are investing in transportation sector. They are investing in the housing sector. They are investing in agriculture. Do you think they are just doing all of these things just for doing sake? No, but they are meeting basic human needs. They are meeting basic human needs, and the more demand people have for the thing, the more prospective money that they make from it. Now, I needed to establish this point because I want to draw our minds to the importance of real estate today. I want to draw our mind to the importance of real estate. Now, let me now take us back to our major conversation. I want to say a very big welcome to everyone joining the session. Wherever you are joining the session from, I honestly don't take it for granted. You can type out in the comment section where you are joining us from. If you're joining from the UK, you can say, I'm joining in from the UK. If you're joining from the US, from Lagos, Abuja, Bayelsa, Port Harcourt, wherever you are joining us from, I want to celebrate you personally, right? I want to celebrate you personally. You can drop a chat in the chat box and say, okay, this is where I'm joining in from, so I can celebrate, I can recognize and celebrate you personally. Now, back to our conversation. Back to our conversation on real estate. Back to our conversation real estate. I was saying that too many people buy properties without thinking about earning. And today's session, we are going to be shifting that mindset from just earning to building actual portfolio. We are going to be shifting the mindset from just earning to building a actual real estate portfolio. All right. I was trying to fix my screen. Now, let's take an overview about the Lagos real estate market performance and data trends for last year. Last year is 2025. And remember earlier on when we started out the session, I said the year is just beginning and it's very important that you plan out the year in a very strategic way so it can help you do things in a much more better way. Now, let's take a look at the Nigeria or Lagos real estate market performance and data trends. In Lagos, property prices grew significantly. Property prices grew last year significantly. Residential prices averaged around 50 million in 2025. Now, I mean residential properties. And when I'm saying residential properties, I'm talking about like the rental value of these properties. It averaged around 50 million in 2025, with prime areas like Ikoyi and Victoria Island commanding much higher premiums. Places like Awesome. I can see Ebube say United States of Lagos. You're welcome. Welcome on board. Now, places like Lekki also have seen a very high dramatic appreciation over the past few years and nearly doubling the price in some cases. There are some cases where the prices of rental properties, rental value even doubled itself by 100%. You understand? I was telling somebody last year that we should be expecting property owners to landlords to increase prices of rent because of how the trend is going. Now let's look at the rental market value. The second thing I'd like to discuss here is that the rental market is very strong in Lagos and in Nigeria at large. Rental yields in Lagos vary by location and the type of property. Of course, typically between 5% and 15%, with emerging areas and short-let apartments delivering highest yields. Now, as at last year, there was a rave of dirty December. I mean, in 2024, there was a rave of dirty December. And in 2025, we saw the influx of diaspora market into Lagos State because of the rave in previous years. And it wasn't like this wasn't even in existence. It was in existence. It was in core existence. But there was a rave in it in 2024, and then last year we saw sporadic increase in it as well. Now, short-let apartments delivered the highest yields when it comes to the rental market. Short-let rentals in areas like Lekki and Victoria Islands have commanded yields of about 10 to 15%, reflecting high demand and premium cash cash flow potential. I said it in my previous session. I said real estate practically moves to two singular things. The very first one is demand, and then the second one is supply. If you look at the Lagos real estate market, it strictly obeys this rule to the highest and to the fullest. Lagos real estate market obeys the rule of demand and supply. A lot of people demand real estate in Lagos. Practically short-let rentals, normal annual rentals, commercial properties, and even residential properties. The market is very, very strong. I'm going to draw our minds to where I'm going, because I know some persons will be wondering, why am I mentioning all of these things? I want to set the base and the foundation before I move into the next one. Now, just like I mentioned, the demand is fueled by rental population. Now, if we take a very clear look at things, over 70% of Lagos population over 70% of Lagos population residents, they live in rented apartments. They live in rental homes. And this means that there is persistent demand for income producing assets. There is persistent demand. I'm not saying consistent, because the consistency is there already. I'm saying there is persistent demand for income producing assets. Now, let's take a look at the outlook that continues strongly. Experts have projected that there's going to be a continued annual growth of about 5 to 15% from 2025 to 2026. And this outlook is driven by urbanization when it comes to infrastructure and strong diaspora investment. When I say strong diaspora investment, we are going to be having very solid diaspora investment in Nigeria. Before we even started out the session, I was having a quick chat with one of my clients, because I sent out messages inviting a lot of persons in my DM to the session. So I was having a conversation with my client, and it was like, this year is going to be investing a lot in Nigeria and all that, and he's going to be inviting his friends as well to be investing in Nigeria. Now, that is just one person. Imagine the volume of persons also having this kind of conversations with other people. You understand? Now, there is going to be a very strong diaspora investment in Nigeria in the year 2026. Now, this data shows that the Lagos or Nigerian real estate market is not static. It's appreciating and yielding income already as we speak. But the type of asset and strategy determines whether you, as an investor, either a seasoned investor or a new investor, the kind of strategy that you apply will show if you have an asset or a money machine. Because of course, your properties can become a money machine. You understand? Your properties can become a money machine. Now, let's take a look at the global trends, because of course in Nigeria we saw that real estate really performed very well, right? Real estate did very well. Let's now compare it to the global real estate market trends. Now, real estate performance is not uniform in the global market in 2025, but income producing and specialized assets continue to attract investor capital. Emphasis on income producing and specialized assets, because that's the part that I really want us to focus on when it comes to setting up structured and profitable real estate investments. You understand? That's the part I really want us to really focus on. If you are just joining the session, I want to say a very big welcome to you. My name is Abel Victor Timipamo-owei, real estate investment expert that has helped over 150 individuals and corporate enterprises invest profitably in real estate. And today we are discussing on a very important topic: how you can structure your real estate investments to be very profitable in the year 2026. If you've shared the meeting link, I want to say a very big thank you so much. For those of us that are on the chat, that are on the call, I want us to share this meeting, share the meeting link to as many persons as possible. Share it to 3 persons, share it to 4 persons, share it to 5 persons, share it to 6 persons. In fact, let me even see in the chat box if you've shared the meeting link. If you share the meeting link while we are on the meeting, let me see you comment I have shared. Let me see you comment I have shared. I've shared. If you shared it, let me see you comment I've shared. If you shared it with 2 persons, say 2 persons. If you shared with 3 persons, let me see you say 3 persons. If it's 4 persons, let me see you indicate 4 persons and all. Okay, Toyosi said he has. Awesome. Thank you so much, Toyosi. I think Toyosi is the only active person in this meeting today. I don't want to believe Toyosi is the only active person. I want to see every other person. If you've shared the meeting link, I want to see you comment. I've shared. If you've shared it, I want to see you comment. I've shared. I have shared with 5 persons. I've shared with 6 persons. If you shared it to your Wow, 17 persons. Awesome, awesome. That's a deal breaker. That's a deal breaker. Awesome. I really appreciate that. I really appreciate that. If you've shared it, let me see you comment the number of persons you've shared it with. You shared it with 6 persons, 7 persons, 10 persons. Come on. Let's do that. Let's get as many persons as possible to join in the session. Toyosi said, okay, awesome, awesome, awesome. I'll definitely do that. I'll definitely do that. I love how active you are on the call, and we're going to do that very well. If you have my number, send me a DM and I'll take it up from there. If you have my number, send me a DM. I'll do that. Thank you so much. Now, we are talking about the global real estate market, right? Real estate performance wasn't really global, wasn't uniform in the global market, but income producing assets continued to attract investor capital. That's what we're really talking about. Now, Nigeria and Lagos's strong rental yields and prices growth make it a compelling market by comparison, and this is evident in the rapid and continuous influx of foreign property developers targeting the Nigerian market. My friend Toby, he was always posting on his status that there's this Dubai developers that's always targeting him with their ads and all that. And I was like, that's even small because a lot of developers, a lot of Dubai developers are going to be targeting the Nigerian market, and also other markets, other countries as well, other global countries will be targeting Africa because there is a big attention that is being paid to Africa. There is a big attention being paid to African real estate market. You understand? So, and when a lot of persons hear African real estate market, what comes to their mind is Nigeria. What really comes to their mind is Nigeria. So I'm setting up all of this foundation because of the level that I am actually going, and I want us to follow through with every of the session today because it's going to be very important. Now, the mindset shift. The mindset shift. Cash flow without structure is temporary. Cash flow without structure is temporary. Now, I'm going to repeat this again. Cash flow without structure is temporary. Generating income isn't enough. Your income must be predictable, repeatable, and part of a portfolio strategy. Your income must be predictable, repeatable, and part of a portfolio strategy because that's what really works. You understand me? That's what really works. there is obviously no way you can have a level of property investments, right? There is no way you can have property investments that you cannot measure the level of income that's going to be coming from those properties. There is no way you have a very solid foundation when it comes to your investment when that structure is not capable of repeating itself even when you are not there. And if that structure is not part of a portfolio system, it means that what you have is not just an income asset, but it's just a structure that is there. Now, cash flow without structure is temporary because there's going to be a time where it will just fade off. You understand? There's going to be a time where it will fade off. So it is very, very important to understand that when it comes to the mindset shift that is needed for your real estate investments in 2026, you need to understand that structure is very, very important, and putting it in a streamlined way, in a way that it can be predictable, it can repeat itself without you having to be there. You understand? And it is part of a portfolio system. Yesterday, I was having a conversation with one of the owners of the properties that I manage. We were discussing about how we can help her make more income from the property that she has already. It's a very good, it's a block of flats, but the way the property is, it is a liability to her right now. The way it is right now is a liability to her. And we want a situation where the assets can give her returns on investment. Now, I have also streamlined a process where every single process is monitored, every single process is streamlined. Abdulaziz said, I've shared with 20 persons. Awesome. I love this energy a lot. I love this energy a lot. Thank you so much for the shares. Thank you so much for the likes. Thank you so much for the repost and all that. In fact, I'm not even going to take it for granted. I think that was on Friday or on Saturday when I released the information about this session. I saw a massive repost from a lot of persons. I really don't take it for granted. And for as many persons that are here, I say a big thank you for joining in the session. I believe that you will learn something very valuable from today's session. Now, I was mentioning about the one of the properties that I manage and how I am able to, and how I am streamlining that property to be able to generate income for the owner. Now, there is one thing for you to have a property. There's one thing for rent to be coming into your pocket from that property, and there is another thing for that same process to be able to repeat itself, and then you apply that as a strategy. Are you getting it? You apply that as a strategy. Now, the strategy is not just based off of the fact that, okay, it is just there, but a strategy where you know very well that you are putting it as part of the very serious things that I am doing. Now, let's take a look at the mindset shift. Now, costly mistakes that investors make when it comes to real estate investment. I'm going to be discussing this at stretch. I'm going to be discussing this at stretch, and I want you to follow me verbatim. One of the costly mistakes that investors make is to chase capital appreciation alone. That's one of the very costly mistakes that a lot of investors make these days. They chase capital appreciation alone. Now, if you are chasing capital appreciation alone as an individual, you may most likely not even get it right, because that's one of the mistakes that a lot of persons make. You see them buying 5 properties, 10 properties, 20 properties. What's the aim? Just for capital appreciation. That's one of the costly mistakes that a lot of persons make. Another costly mistake that people make is to buy property without income plan. Buying properties without income plan. Another mistake they make is that they tie up capital without liquidity. And this one applies to a lot of young people. This one applies to a lot of young people. They just jump into real estate investment without proper guidance and the rest. They buy land for land banking purpose, and then the next thing you're seeing is that they are struggling financially. Whenever I have conversations with my investors, I always tend to have these kind of conversations to ensure that you are not just investing in real estate with money you want to use. Because of course, even if it's money you want to use that you're using to invest in real estate, there should also be some level of liquidity on your own part, because whoever is liquid have access to also diversify. You understand? Whoever is liquid have access to diversify. Now, without liquidity, you can't diversify. Without liquidity, you may most likely not survive. You get? So you need liquid to be able to survive. That's where you see people buying land today and then tomorrow they are already selling it because they've gone broke. Because of course you did the wrong investment, right? That was the wrong investment you did at that point in time. You get? Now, another very costly mistake that investors make is that they ignore management and exit strategies. They ignore management and exit strategy. I always say this: the moment you make a decision to buy real estate, that's the point you're supposed to make money. The moment you decide to invest in real estate, the moment you decide to buy property, from that very moment, you ought to be making money. In fact, you make money the very day you decide to invest in real estate. And then, if you do it right, your exit strategy, you're going to be making much more money. I don't know if that makes a lot of sense. You make money the day you decide to invest in real estate. You make more money when you have the right exit strategy. So you are not just investing in real estate with the idea that I'm just coming here to invest, but you are investing with the right mindset in place. Now, let's take a look at the roadmap for new investors, especially individuals that are just starting out investing in real estate. If you're just starting out real estate, I have a roadmap for you that you can follow through in um, in in the year 2026. I have a roadmap for you when it comes to what you should do, how you should do it in the year 2026. Now, I need you to follow me verbatim. I need you to follow me verbatim. The very first strategy is to define your investment purpose. I know you'd have heard me say this before, but the very, very first strategy is to define your investment purpose. Why are you investing? Why do you want to invest in real estate? This is a very, very important question. This is a very, when I say very, very important, this is a very, very, you don't even joke with this kind of investment, because the moment you don't ask yourself why you are investing in real estate, if you don't ask yourself the purpose with which you are investing, you will start making wrong investment decisions. You will start making the wrong investment decisions. So it's very important that you ask yourself investing in real estate. Now, you might want to also confirm some other very important things, because your ability to answer this question is what will set the foundation for your investment. Your ability to be able to answer those questions sets the right foundation for your investment. This will actually tell if your investment will come out well or if it will come out bad. This is what will tell if your investment will come out well or if it will come out bad. So, your ability to answer this question is very, very key. Your ability to answer this question is key. Why are you investing? You get my point? If you are getting value from this session, I want you to type out in the comments, I'm getting value, I'm getting value, I'm getting value. Let me see 2 comments, 3 comments, and then we'll continue the session. If you're getting value from the session, let me see you type out in the comment, I'm getting value. Let me see you type out in the comments, I'm getting value. Awesome, awesome. I can see that. I can see that. Awesome. Awesome. Thank you so much for that. Thank you so much for that. I love that comment. I love that comment. Now let's move on to defining your investment purpose. Now this is a roadmap for new investors, right? This is a roadmap for new investors. Now you might want to ask yourself, because the year 2025 is just starting, and it's important that you know your purpose of investment. Now the first reason you might want to ask yourself is, am I investing for rental income? Am I investing for rental income? Thank you so much. I'm seeing your comments. I'm getting value. Awesome. I like that. Thank you, Smart. Thank you, Ecolens Solutions. Thank you, Toyosi. Thank you, Abdulaziz. Thank you, Favor. Thank you, Grace. I can see your comments in the comment section. I really appreciate that. Thank you so much. Now, let's go back to the reasons why you're investing. Now, are you investing for rental income? That's a very, very important question. Now, for young people, a lot of young people, this is where they get it wrong, or this is where they get to be confused, because when they say, I want to buy property, I want to buy land, the moment they come to you, they say they want to buy land. Some persons don't even know what the land could actually be for, because you can buy land and lease out that land. That land can also become a rental income for you. Are you getting my point? You can buy land for capital appreciation. You can buy land for agricultural income. So these are reasons why you invest. You might buy land, you might have it in mind to buy land for diversification. Okay, I have stocks, I have investment in stocks market already, so I want to look out for another sector that I should invest in. Last year I was having a consultation session with one millionaire, and I was going to mention his name, but thank God I didn't mention that. Now, from the process of our conversations, I got to find out that this individual, he has an investment in the stocks market, and he also has what's this investment that people do in the bank where they leave it for a long period of time, let's say a period of 1 year or 2 years before they resell. There is a name they call it. Now, this man had this investment, and the I think the returns on investment is, I think is a fixed deposit. Yes, that's the word I'm looking for. So he had an investment with a bank, and the money was kept for fixed deposit, and I think the bank was giving him is it 7% return on investment annually. Okay, Alfred said FGM bonds. Okay, FGM bonds is part of it as well. FGM bonds is part of it as well. Now he has an investment with the bank fixed deposit. Now he kept the money there, and the bank was giving him about 7% returns on investment. And when I had in-depth conversation with him, I got to find out that he also has FGN bonds. He has investments in the forex market as well, and he's looking at doing real estate because he wants to diversify. He said, let me quote what he said, he's tired of the market being fluctuating up and down. So he's looking for an asset where he can put his money and he's sure that his capital is being preserved. Are you getting the point? Are you seeing a reason why somebody wants to invest? He is investing because he wants his capital to be preserved. So he is not even concerned about the returns that he's going to be getting, but he wants a situation where his capital will be preserved. Because, of course, when you keep your money in the bank, inflation is definitely going to deal with that, your capital in the first place. Aside the fact that the bank is going to be giving you 7% um for keeping his money in the bank within that period of time. If he cashes out that money as at 2025, obviously the inflation rate as at 2025 would have eaten down the value of that money, and that money will not be worth what it's worth even 2 or 3 years ago. Do you agree with me? If you agree with me, type in the chat box, I agree with you. If you agree with me, type out in the chat box, I agree with you. Because imagine you put your money in the bank on a fixed deposit level, let's say for a period of 2 years, and inflation is already at 20% in the country. Inflation is already at 20% in the country, and your money that's in the bank as fixed deposit, your money that's in the bank as fixed deposit, the returns you're going to be getting is 7%, while inflation is already 20%. Is that a good investment or a loss? That's a bad investment. You understand? So what he told me during our consultation session was that he's tired of a scenario where the prices are fluctuating and all that. He just wants an investment that's going to preserve his capital. You get, I'm not saying that there are no other investment types that preserves your capital, of course, but the one that could really come to his mind at that point in time was the real estate market. So that's to tell you how paramount and how important real estate investment actually is when it comes to diversification. Then another reason why you might want to start investing as a new investor is for retirement and income preservation. Retirement and income preservation. Now, I already mentioned that before. So you are investing ahead of your retirement phase. You are investing ahead of your retirement time. Then the next one is wealth preservation. Wealth preservation, because this is the highest form of investment goals. This is the highest form of your investment goals, or this should be your highest form. Now, whatever assets you have that is not transferable, whatever asset you have that is not transferable to another generation, that asset may most likely just end at your own generation. It may just end at your own level. And in most cases, it doesn't really play out well. You understand? It doesn't really play out well. So it's better you have very streamlined reasons and purposes for investing. For young people or individuals looking at starting out real estate or new investors, several reasons you're investing that you want to define your investment on. Number one, is it for rental income? Number two, is it for capital appreciation? Then you might also want to think about passive agricultural income, because I'm going to talk about this as well. Then the next one is diversification. You have investments in other places, you want to spread your income across different sectors. So that's diversification. Then the next one is retirement income, and then what we have as wealth preservation. Now, wealth preservation may be the core of it all, but definitely there is also what we question in the right structures. Now, if you are able to put out all of these things in a portfolio system, I'm going to show you an example of a portfolio, of how you can build a portfolio either as a young person or as a seasoned investor. I'm going to show you how you can build your investment portfolio. Now, I've given us a roadmap for the new investors. For those persons that are just starting out real estate investment, this is a roadmap that you might want to follow. Sit down and ask yourself, this investment, is it for rental income? Is it for capital appreciation? Now, for most persons, the part that is very good to start with is capital appreciation. Now, there is a playbook to these things. There's a playbook to these things. Depending on your capital level or depending on your risk level, the very first way you want to start out investing in real estate is via capital appreciation. So from the funds you get on your property that has appreciated in value, you can then reinvest it into rental property for your rental property to start giving you passive stream of income. Now, aside for capital appreciation, there's also passive agricultural income that you might want to focus on. Like for example, we have Rootland Farms and Resorts, one of our estate developments that we have. You can invest in properties like that. Investing in properties like that gives you leverage to earn income on agricultural produces, right? Then we have retirement income, which you can also still focus on either agricultural level or the on capital appreciation level. Because of course I know of, I've heard of a story. I was having a conversation with my boss where we were discussing about one billionaire in that has assets in Ikoyi. Now this guy practically bought that property when he was a youth. He bought that property when he was still a very young boy, and he left it there. What he did was that he leased out the land to one of these developers to develop on the land. Now, the developers developed, I think, units of apartments, skyrise property, and then at the end of the lease tenure, the man is now in full control of that asset, and today he's retired. He travels the world as though he is the owner of the world, because today he's in one country, the next day he's in another country, and all that. Now, what made him have access to that kind of privilege? Number one, he was able to discover what he wanted with that investment many years ago. He knew that that was going to be his retirement asset. So he invested strictly for retirement purposes. Now, when you define your desire to invest, I'm talking about the young people now. When you define your desire to invest, you choose properties that align with your goals and not just speculations. When you define your desire to invest, you choose properties that align with your goals and not just speculation. So you are not just speculating. You know that this is what I want to do, this is how I will do it, and this is when I will be getting the returns. I'm going to talk about exit strategy before we wrap up the session. Now let's talk about the roadmap for seasoned investors, because of course everybody, there is always a levels to these things. There's always a level to this thing rather. So it starts out with the beginners, for those persons who are newly investing in real estate, and then it transitions into those persons who are seasoned investors. So we are going to be talking about the roadmap for seasoned investors when it comes to their investment strategies for 2026. Now, the very first thing I want to say here for seasoned investors is that if you currently own a property and that property is not generating income, you don't need another property. Honestly, you need a better structure. If you currently own a property that is not giving you income, you don't need another property. You need a better structure. I've heard people, a lot of persons saying that it is not good financial advice for you to own your own property, but it's better that you live in a rented apartment and you have rental properties that is giving you income while you are still living in a rental property. Some persons, let me be even very honest with us, those properties that you are killing yourself to build and say, I won't get my own house, I want to have my own house, I want to be the boss of my own self, that property may likely not be an asset for you. It may be a liability. Are you getting my point? It may be a liability, because if the property you have is not generating income for you, then you don't need another property. What you need is a better structure, a good structure that's going to help you streamline a process where you can earn from that property, you can measure your level of income on that property, and you can repeat that structure for other properties that you have, or for other properties that you intend to have. If you are getting value, let me see you type out in the comment section, I'm getting value, I'm getting value, I'm getting value. And for those persons that are just joining in, I want to say a very big welcome to you all. Thank you for taking your time out to join the session today. God bless you so much. I really don't take this for granted. And I hope you're learning something that's going to be very, very impactful and important in your investment journey. Thank you so much. I can see your comment. I'm getting value. I really love that a lot. Thank you so much. Now, I was talking about individuals that have assets in real estate, right? I'm talking about individuals that have assets in real estate, or that already have property. If your property is not giving you income, what you don't need another property to be added to it. What you need is to streamline your investment. Except the property that you have is in the village. You get, except what you have is in the village, and of course you need another property. If the property you have is in the village, I agree, you need another property. You get. I really want us to get as many. My network is okay. I think I'm back now. I think the network was kind of short. Awesome, awesome. So if you can hear me, let me see you comment now. Let me see you comment. I can hear you. If you can hear me, let me see you comment. I can hear you. I can hear you. There was a little network glitch, so I needed to fix that. Okay, awesome, awesome. So now I was talking about the portfolio structure. Okay, I genuinely thought it was from my end. Okay, awesome, awesome. Thank you. I think it was from my own end. The network was a bit slow. So I was talking about the three portfolio that every investment for the year 2026 should be centered around. Let me actually share my screen so that you can see it very well. I want to share my screen now so you can see. So content, if I say content, now your portfolio, your investment portfolio should be centered around these three things. Your content portfolio, your investment portfolio should be centered around these three things. The first one, stability assets. The second one, income assets. And then the third one, growth assets. Growth asset. I'm going to explain all of these things in depth. I'm going to explain them in detail so that you can understand every single thing I am saying when it comes to stability asset and the income asset and the growth asset. Now, your portfolio should capitalize around this. Your stability assets should be able to protect your capital and edge against inflation. That's what your stability assets really does for you. Now, I'm going to also explain further about this. Your stability assets, your stability assets should be able to give you very good protection when it comes to your capital and also edge against inflation because that's what your stability asset does for you. Your income assets should be able to produce consistent cash flow and accelerate sorry your income asset should be able to produce consistent as cash flow, and then your growth asset should be able to accelerate your wealth. Now, if these three things are not really fixed in your portfolio, if these three things are not fixed in your portfolio, then something is already wrong. Okay, Toyosi said, I can't see your screen, sir. Can you see it now? Can you see it now? If you can see it, kindly comment. If you can see my screen or if you can see what's on my screen now, kindly comment. I can see so I know that we're together. Can you see my screen? All right, awesome, awesome. So now every of your okay, thank you so much, Akinwale. You're welcome to the session. Let me welcome everybody again, once again. Good to have every one of you on the session. And I hope you're getting value. If you're getting value, please reshare the meeting link with as many persons as possible. Let's let everybody come in to learn and get value from today's session. Now, we are talking about the core portfolio framework for 2026, and I have centered it around three core pillars. The core pillars are stability assets, income asset, and then the growth asset. Now, your stability assets should be able to protect capital and edge against inflation. That's what stability asset does for you. Income asset produces consistent cash flow. So at every single point in time, there's consistency in cash flow. Then your growth asset accelerates your wealth. You get, it accelerates your wealth. Now, Let me point out into us. Now, the results after you've highlighted the pillars, after you've highlighted the pillars, then you identify the purpose for that pillar. Once you've identified the purpose for that pillar, the next thing you want to center around is that you want to be sure that the result matches with the purpose. So your stability asset forms the base of your portfolio. Now, when you look at, especially even for young people when investing in real estate, when you look at your pillars, it should start from the very first one, stability asset. Because as you are making money either from your 9 to 5 or from your gigs that you're getting, or you're making money from other forms of investments like forex and the rest, the very first thing that should come to your mind when it comes to your real estate investment portfolio or anything that has to do with your investment portfolio at large, your stability asset should be the number one. And any investment you want to do as a young person, stability asset should be the core of it. Even for seasoned investors, what should form the core of your investment portfolio should be stability assets. So even if they don't give you monthly income, they should preserve the value of your money. They should preserve the value of your capital and hedge against risk of inflation. Now, do you see the reason why this should be the number one in your list? This should be the number one in your list. Then the second one, which is your income asset, the result should match with your purpose, which is producing consistent cash flow. Income asset should support your monthly cash flow and enable reinvestment without even selling. Remember the story I mentioned earlier on that some people jump into real estate and then after like a few months into it, they go broke again and then they sell the property that they bought before just to help them to be able to overcome that level of brokenness that they are on. So that shouldn't be your own case. Your income asset should support your monthly cash flow and enable reinvestment even without you selling the asset. Then your growth asset should contribute higher long-term returns, but these long-term returns should be structured. I know of a deal that we're working on sometime in 2025 where we have an investor that wants to buy some units of Goldmark residence. And he's okay, he wasn't buying units of Goldmark, he was going to invest, as in give us money to develop the property, and then the investment is going to span for 5 years. So it means that he's giving us his money to use it for development of different real estate projects for 5 years, but we'll give him returns on investment. Does that make sense to you? So that's what we call growth assets. So you are putting your money into an asset that's going to contribute higher long-term returns, but that investment should be structured. For the case of this investor that I was actually speaking, we structured this investment to last for 5 years. So this is not speculative. We are not saying, okay, maybe in 2 years, maybe in 6 months, maybe in 7 months. But this time we are very specific. We are saying in 5 years you should be able to get these returns on investment, and every single action that's going to be carried out will be centered around that. Now, let me give us examples, because of course when you mention things like this, it's always good to mention examples. The very first example when it comes to stability assets, the very first example when it comes to stability assets is, let's say, Harmony Hills Estate, Harmony Hills and Rootland Farms and Resorts. Now, these two properties, they protect your capital and hedge against inflation. Harmony Use Estate will protect your capital and hedge against inflation, because you might do something like land banking on it, right? And then for Rootland Farms and Resorts, you're also buying the land, but you are getting access to make passive stream of income from that property. So the land itself is appreciating in value while your agricultural produce gives you returns on investment. Now, for the income assets, we now talk about Eden Heights and Goldmark Residence. Because, of course, when it comes to income assets, we are talking about consistent cash flow, either on a monthly basis that's put out on short let rentals or we are talking about annual rentals, which is specifically on Eden Heights that is located in Aja. Now, for growth assets, because this is the core part of it, growth assets, you want to invest in off-plan projects. Let me give you a practical example when it comes to growth assets. Now, why is growth asset one of the biggest form of the portfolio pillar that you might also want to focus on? Now, people who bought into the Goldmark residence as at 2 years ago, we have investors who bought into Goldmark residence 2 years ago for 40 million naira. For 40 million naira. We have investors who bought Goldmark residence for 40 million naira as at 2 years ago. Now, as we speak, the finished units, the ones that we've developed, are currently selling at 152 million naira. They are currently selling at 152 million naira. Now, tell me how much capital growth this person has made. We are talking about growth assets, right? Tell me how much capital growth this person has made. Can somebody do that calculation for me? 152 million naira, you minus the person's capital, which is 40 million. How much do you think this person made? Let me see you type it out in the comments. Let me see you type it out in the comments. 152 million. Somebody bought a property for 40 million naira, rather. Yes, he bought a property for 40 million naira 2 years ago. And now the project that he bought is now selling at 152 million naira. How much profit do you think that person made? How much profit? That person has made over 112 million. Do you get? That person made 112 million in capital gains without having to do anything. Do you think if that person put that money in the bank, that person will get that money? If that person puts that money in the bank, let's be very honest. If that person put that money in the bank, will that person make that amount of money? Not possible. It's not possible, except you are a very you are an expert forex trader, or you are some sort of trader that knows about the FX market very well, that you can make very great turnover like that. But minus that, even the bank, no amount of savings can give you over 100, and that's over 200% returns on investment. Over 200%. Somebody bought at 40 million, and the same property that I bought at 40 million is now selling at 152 million. So this person can decide to sell his units and cash out, look for another project to reinvest in, um look for another lesser project to reinvest his money, and then the remaining part of the profit he made, he use it to either flenjo or do whatever kind of investment he wants to do. But that's a good way of growth asset. You understand my point? That's a good growth asset. Now, another type of growth asset that we can also look at is investing in land banking. Land banking simply is buying a plot of land or a piece of land, keeping it for years to appreciate in value. That's also growth asset, because a property you bought today at 400,000 naira, a property you bought today at 400,000 naira, in another 10 years, depending on where you bought it, right? In another 10 years, I guarantee you that that property will not be 400,000. That property will not even be 500,000. That property will not even be 600,000. But I guarantee you how much you will make. You make even over 1,000% on that property, especially properties. Let's use practical examples now. Let's use Ibudo as an example. Ibudo is one of our property developments in Ekpe. Or let's even use Harmony Hills, like I mentioned earlier on. Harmony Hills is currently selling at 4 million naira for 500 square meters. Do you think in another 10 years, 4 million naira now will still be 4 million naira at that time? No. The value of 4 million naira in land will be more if it is in cash in the bank. Are you getting my point? The value of 4 million naira will be more when it's in the bank, sorry, when it's in real estate, than the way it will be when it's in the bank. So you want to invest heavily when it comes to these assets. So you also want to structure your investments in these directions. You also want to structure your investments in these directions: stability assets, income assets, and then the growth assets. Then your purpose is very, very important. Don't joke with it. Your purpose. Let your stability assets protect your capital and edge against inflation. Your income assets should produce consistent cash flow, and then your growth assets should be able to accelerate your wealth. Now, types of properties that you might want to look out for: off-plan projects when it comes to growth assets. Income assets, we talk about Eden Heights and Goldmark residence. And then for stability assets, we discussed about um, Harmony Hills, um, Harmony Hills Estate. Now, let's now talk about the practical structure example, because of course, when you when you suggest things like this, or when you highlight things like this, it's good that you also discuss about the practical ways you can structure the investment, right? It's also good that you highlight the practical ways you structure the investment. One of the practical ways of structuring your investments is in these directions. For your rental income, you want to structure 20% to it. Now, I'm not saying you should invest all your money that you're getting into real estate investment, because it's good to diversify into other types of investments. Do you get my point? It's good to diversify into other forms of investment. Now, diversifying into other forms of investments also require that you know the amount you are allocating into those types of investments. So we are now talking about the high yield rental properties, the high yield rental investment. If you're getting value, I want you to share this with as many persons as possible. Repost it. For those persons that have reposted, thank you so much. If you're just joining in the session, my name is Abel Victor Timipamo-owei. I'm a real estate investment expert with over 5 years of experience helping individuals, clients, corporate bodies to invest profitably in real estate. And I'm also a business consultant. I've helped small scale businesses to grow their income at several levels. Now, we are discussing about the practical structuring example. Now, how do you allocate your funds when it comes to investing in assets like this, especially for young people? Especially for young people. Now, how do you structure your investments? You might want to start it out in a very small way. Now, remember I talked about capital growth, right? Capital assets. You structure 40% to it. Then when it comes to passive agricultural income, you structure 25% of your income to it. Now, I'm not talking about your entire income. I'm talking about the budget you've allocated for investment. Don't get it wrong, because your entire income as an individual, either experienced or non-experienced investor, you should also have other types of investments that you structure your investments to. So it's good to have it streamlined. You get my point? It's good to have it streamlined. So the part you've allocated for real estate, the funds you've allocated for real estate, that's what I'm actually talking about here. And this one, you may likely not achieve it in 1 year, depending on your earning capability or your earning capacity. You may not achieve it in 1 year, but it's always good to start from somewhere. So your growth asset, you structure 40% to it, and you might want to look at investing in Harmony Hills Estate. You do land banking. Then if you have the capacity to do over 100 million naira, you structure it on off-plan development, which is the Goldmark residence. Then your passive agricultural income, you want to look at 25% of that total allocated funds for agricultural purposes. You might want to also take a screenshot so that you can get to look at these things again. Then for those persons that will be interested, I will share the document to everyone so that you can go through it and have the knowledge over and over again. Then for your steady rental income, you want to allocate 20% of your budget to it. 20% of your budget allocated for Eden Heights and Goldmark annual rental income. Then for high yield rentals, when we say high yield rentals, we are talking about short let rentals, right? So we're talking about short let rentals. You want to allocate about 15% of the income to it. Now, this is going to help you not only this is going to help you to not only invest right, but it will help you build a structure and a system around it. Remember, I mentioned to us earlier on that if your assets is giving you income, but the income is not measurable, is not repeatable, and is not in a portfolio format, then what you have may most likely turn out to become a idle property. It may most likely turn out to become a idle project. So it's very, very important that you structure your investments in this direction. Now, common investment mistakes to watch out for in 2026. Common investment mistakes to watch out for in 2026. This part is very, very important, and I would like to place emphasis on it. I would personally like to place emphasis on it. No emotional buying. No emotional buying. Oh, I heard that this property is going to do like this, is going to do like that, it will give me XYZ returns on investment, this and that and the rest. No emotional buying. Now, another form of emotional buying is saying that you don't like the location, you don't want to buy the property in the location. That's emotional buying. Of course, now I have mentioned this on several bases and on countless times that when you want to do your investment, it's better you invest in economy that is very, very positioned to give you good returns on investment. It is better to invest in economy that is going to give you good returns on investment as against investing in sectors or in economies that will take longer period of time for it to pay you returns. Are we getting value from what we are learning today? Are we getting value? Because a lot of people still invest with emotions. A lot of persons, if the property is not in their village, they will not buy. If the property is not in their state, they will not buy. Oh, I'm not from Lagos. I'm not buying any Lagos property. I can see Lagos state government demolishing properties here and there. I'm not going to buy. All of those things are emotions. All of those things are emotions. So you want to take out emotional buying. You want to take out emotional buying. Another kind of thing that sounds like emotional buying is my father does not like it, or I need to talk to my wife. Of course, it's good to consult your wife, right? It's good to consult your spouse. But then if your spouse does not have the requisite knowledge, the requisite when I say requisite, if your spouse does not have the requisite knowledge about that investment, it's good that the two of you combine together, consult a professional to speak with. Consult a professional to speak with, as against just saying that my spouse does not like that location. Because of I'm not even joking. I've taken a client to site that when we got to the site, he loved everything. It was about making payments for that property. I'm talking about Ibudo here, Ibudo in Ekpe. Now, we went to site, he saw the property, he loved the land, he loved the amenities that were coming to Ekpe, international airport, many other developments coming to Ekpe. This man has seen the future of Ekpe. Now, he said he was going to speak with his wife about it. I didn't even know he had a conversation with his wife. The only thing I actually knew was that he just said he's no longer investing. But of course, why? If you know, see, it's better you do these things with a professional. If you are going to talk to your dad, you are going to talk to your mom, if you are going to talk to your sibling, talk to them with a professional. It's only in Nigeria you will see people going to buy cars. They will not call their family member. Oh. You understand? They will not call their family member. They will not tell, even some persons will not even tell their brother that they are going to buy car, because they will feel like this person will bewitch me or that kind of thing. So they will go and buy it by themselves, and then the only thing that the family will see is that this person has bought car. But when it comes to real estate, something very important, that's the one they will tell you that they want to go and call. They will gather all their village people. They will gather their mom, gather their dad, brother, sister, uncle, auntie, and you will not see any professional there. You won't see one professional. All of those things are emotional buying. So one of the pitfalls that you need to watch out for in 2026 is to take off emotional buying. Take it off. You understand? Another thing is no income plan. If that property does not have a structured income generating model for you, it's not a good investment. So you need to watch out for that. You need to say, no, I won't take this step. This is actually the step that I will take that should benefit me. You understand? So you need to also take that. Another one is overexposure to a single asset class. Overexposure to a single asset class. Now, when we say a single asset class, we are talking about, for real estate. Let me use real estate as an example now. When it comes to overexposure to a single asset class, we are talking about buying only land. I understand that for young people, what they most likely do is just to buy land because that's what they're able to afford at that point in time. But for a seasoned investor, for somebody who has invested in real estate not once, not twice. In fact, you are very well conversant with real estate market. It's not good that you have your investment in only one asset class. If you have, just like the portfolio that I shared with us earlier on, if you have, then it's also good to have another one in another class. So when you are able to have all your assets in these different classes, it gives you advantage over other persons. It gives you advantage over other uncertainties that may most likely happen. Then another common investment pitfall to watch out for is poor management system. Be very careful when it comes to the management of your properties, because you need to take your real estate investment as a core business. You need to take it as a very serious business. So be very mindful about management systems. Ensure you have the right management system in order to take care of your investment and properties. And then this last one is the most important one. If you are investing without an exit strategy, I don't know what I'm going to say, but your investment should have the right investment strategy. Your investment should have an exit strategy. Every investment you enter into should have an exit strategy. I'm going to mention different types of exit strategy after this slide now. If you are investing in land, if it's land banking you're doing, there should be an exit strategy. If it's property, rental properties you are buying, there should be an exit strategy. If it's just off-plan projects you are buying, there should be an exit strategy. Do you get my point? Now, remember earlier on I mentioned that there's an investor that were able to secure a deal for last year that invested in the Goldmark residence. Now, we gave him a 5-year investment tenure. There is already an exit plan. So we use the funds to develop the project and then sell off for him to make capital gains. Now, if after the exit of this investment, he says, okay, he wants to refinance another project, of course, that option is open. But entering into an investment without an exit plan, I don't know what to say. But cash flow is important to note that cash flow without structure is just temporary. Cash flow without a proper structure is temporary. So in most cases, it's always very good to have a proper structure that follows through. Now, one of the things that you want to take into deep cognizance is by having management and sustainability plan. Real estate is not passive by default. Let's be very clear. Real estate is not passive by default. It's passive only when the wrong systems are put in place. It's only when you have the wrong system that's when your real estate investment becomes passive. So when it comes to management of your rental properties, take tenant screening very importantly. Take property maintenance very importantly. rent collection processes, there needs to be a structure. Then in fact, this thing is very, very important. There needs to be a structure. Yesterday, I was having a consultation session with one of the property facility owners that I'm managing, and and I was highlighting the rent collection process. That's one of even the things I needed to put this into place, because when it comes to management of your assets, it's good that you have the right rent collection process intact. Then the next one is seasonal planning and legal documentation. Now let's talk about exit strategy as we wrap up. Your exit strategy. Number one is either you sell the property, you can sell units post construction for capital appreciation. That's one exit strategy. For young people that are just starting out investing in real estate, one exit strategy is property sales. So you are buying a land, you're keeping it for a period of time to appreciate in value, and you resell it. Like your exit strategy for that investment is to resell, not to develop. That's one. Another one is to develop and use it for rental purposes. That's also another exit strategy. Then option two is long-term lease. Long-term lease. So you own the property and generate monthly rental income. That's one strategy. You understand? That's one strategy. Another strategy is repositioning the asset. So let's say before now, you have a rental property where the only thing you do on that property is to rent it out on an annual basis. But this time around, you are repositioning that asset and you are turning it into short let apartment, so that that apartment can turn a high yield income generating asset. Do you get my point? Then the next one, which is the option four, is recycling your capital. Recycling your capital. So you put a structure to it, you exit after 3 years, or you reinvest into that the same project again. You understand? Or you invest in another project. Then the next one is refinancing for liquidity. Refinancing for liquidity. Let me briefly talk about this refinancing. Now, in most cases, we see people buying properties that does not have value. Now, when I say the property does not have value, either abandoned projects, abandoned properties, uncompleted buildings, or a property that is not up to standard. It's built, finished, but it's not up to standard. So what you do is you get money, you refinance that project. You refinance that project either for rental purposes or for Airbnb purposes, and that actually gives you liquidity. Sometimes you might invest in some projects so that those assets can give you access to get capital for other kind of businesses. I know people that does that. They buy properties strictly with the aim of wanting to reinvest, to get finance to reinvest in other sets of projects. Now, if you don't make money, I mentioned this earlier on, if you don't make money when you buy real estate, you make it when you exit well. I remember when we started, I said you make money from the very moment you buy real estate. From the very moment you buy real estate, that's when you make money. But if you don't make money from that point of buying real estate, the next point you are supposed to make money is when you exit well. Let's use, for example, the properties that you buy in the village. Those type of properties, you do not enter into that project very well. You didn't enter into that property very well, or you didn't enter into that asset in a very good manner, except it's for retirement purpose. Now, when I say retirement, you are saying that, okay, I'm working in Lagos, I'm working in Abuja, I'm working in the UK, I'm working in London, and the place I want to retire is in my hometown. That's fine. That's a retirement investment you're doing. You get, that's fine. But if you invest in an asset that does not have potential to give you returns, the next possible time that you're supposed to make profit from that investment is your exit strategy. So it's very, very important that you have the right exit strategies in place. With this, we've come to the end of today's session. I would like to take questions. Now, my final thoughts before we wrap up. My final thoughts before we wrap up. When it comes to real estate ownership, when it comes to buying of lands, buying of houses, and all of these things, it's always very important to place emphasis on structure over just ownership. It's always good to place emphasis on structure over ownership. Even if it's only one land you are buying, even if it's one land you are buying, it's good to place structure over ownership. You understand? Put a structure around it as against just saying, I have this land. Of course, conversations it's harder when you have a different set of experience by owning lands, owning assets, right? The kind of conversations you have with people differs. But then it's good that you put structure around it, because structure is going to help you do things better. Then the next one is that clarity is better than assumption. It's better you have clarity about a property than assume that that property is going to give you returns on investment. If there is a structure that's placed around the income generating process of that asset, it's good that you have clarity on it. It's good you have clarity on it. Have clarity on the title of the land. Have clarity on the returns on investment. Have clarity on your exit strategy. Have clarity on how you tend to refinance the project. Have clarity on these things. It's better you have the clarity than to have assumptions on it. Then the last one is strategy over luck. Let me tell you something very, very seriously. Something very, very serious. You will I understand that some persons are very lucky when it comes to investing in real estate and investing right. Okay, Ebube said place emphasis on structure over ownership. Thank you so much. I love how engaging we are in the chat box. This really shows that we are learning a lot. I so much appreciate you all. If you are getting value from the session today, I really appreciate you. Thank you so much. For those persons that reposted, I want to say very, very big thank you to you all. Now, I was also mentioning something about about strategy and luck. Now, I know some persons are going to mention that some people are very lucky when it comes to their investments, but the truth is that some people place emphasis on doing what we call strategy. You understand? Some people place emphasis more on strategizing about their investment as against just doing it with the fact that okay, I will get lucky one day and the property will appreciate in value and all that. No, it doesn't work out in that direction. You have to place structure. You understand? You have to place strategy over luck. So with the right strategy put in place, definitely luck comes in and you get to achieve success at anything when it comes to real estate that you do. Aside even real estate, some persons the right strategy even helps them become very successful as against just doing things with luck. You get the point. So I want to say a very big thank you to every one of you for joining the session today. It's been an amazing time with you all. It's been a great time edge with you. I say very, 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 very big thank you. If you have questions, you can drop your questions in the chat box. I'm going to take your questions now. I'm going to be answering them. And if you feel like, oh, you don't want to drop it in the chat box, you want to reach out to me personally, my Instagram handle is there, Abel underscore Victor underscore T. The T stands for Timipamo-owei. I pride so much myself in that name, Timipamo-owei. So you can reach out to me either on Instagram, on LinkedIn, on Facebook, Abel Victor Timipamo-owei, to ask your questions and all that. Or you can scan the barcode showing on your screen to follow me on all social media platforms, and also to book a consultation session with me. You can scan the barcode showing on your screen to follow me on all social media platforms. And I want to say a very big thank you again, once again, to every one of you for joining in. Alfred said, with Eden Heights and Goldmark, is there opportunity to buy and pay over 12 months? Two, how can we lock down the investment and return strategy from the onset? Okay, awesome. Let me answer that question very quickly. Now, with Eden Heights and Goldmark residence, there is an opportunity for investors to make a deposit and pay over 12 months. For Goldmark Residence, we are currently developing the second phase of the Goldmark Residence, which comprise of the Block C and the Block D. The Block C and the Block D, we've delivered the first phase, which comprises of Blocks A and Blocks B, and we are starting out the second phase now. And the second phase, we are currently running it up at 100 million naira, but it's selling at carcass level. But if you say I want the finished units, you can get it at 152 million naira. That's the price for the gold mark. The phase one, which we've built, is selling at 152 million naira right now as we speak. And then the second phase, which is the block C and the block D coming up, is currently selling at 100 million naira and will be delivering those at semi-finished level. So the initial deposit is 30 million naira, and then you spread balance in 3 months, in 6 months, or in 12 months without any additional interest. Then for Eden Heights, the initial deposit is 3 million naira. You can see that it's not expensive. So we have studio apartment and we have one bedroom apartment in Eden Heights. The initial deposit is 3 million naira. If you are going for the studio apartment, the studio apartment is selling at 12 million naira, and then the one bedroom apartment is selling at 24 million naira. So if it's a studio apartment you want to go for, the initial deposit is 3 million naira, then you spread the balance in 3 months or in 6 months. We are also looking at delivering Eden Heights in the first quarter of 2026. So between now and let's say March or April, we are looking at delivering Eden Heights to our investors. So if you're very much interested, you can send me a DM. I'm going to put out my number in the chat box now. 07063676599. You can give me a call so we have that conversation um in at in-depth level. So give me a call, then we have a conversation about it at in-depth level, or you send me a DM on Instagram, then we'll take it up from there. Not Instagram, on WhatsApp via this same number 070 6367 6599. That's my WhatsApp number. You can send me a message on WhatsApp and we'll have an in-depth conversation about that. Now, to answer your second question, how can we lock down the investment and return strategy from the onset? Now, if we are going to be doing, let's use the Goldmark residence for example. How can you lock down the investment? Now, I mentioned to you that we are starting out the second phase of the development. Now, the best time for you to lock down on any investment is at the beginning stages. Is at the beginning stage. That's when you lock down on that investment. Remember, we had an investor that started investing at 40 million naira when the property was just introduced. Do you get the point? And now we are introducing the second phase of the project, which is the block C and the block D, at 100 million naira. So this is also a good time to lock down the investment. So the only time you are going to see this price at 100 million naira is just now. You understand? Is now, because in another 6 months, in another 12 months, the price will go up again. You get my point? The price will go up again. And when the price goes up, you know what that does for the people who invested earlier? That's capital appreciation for them. You get my point? So that's easy way for them to make money. So the best time to lock down on the investment is to get it right now, that as I'm even talking. If you are interested, send me a DM and let's have that conversation on how you can lock down your own unit. Then the returns strategy. You can either use the project for annual rentals. When we talk about return on investment, you can use it for either annual rentals, you can use it for short-let rentals, or you are investing for capital gains. You understand? Or you are investing for capital gains. So capital gains is one very important and paramount strategy that you might want to look out for when it comes to returns on investment. So when we say capital gains, you are buying now at off plan stage, and then you wait till we finish the development, then you resell it to make capital gains. So that's one strategy. You understand? So there are different ways you can actually I believe with these ways you are able to get it right when it comes to your real estate investment on Goldmark or Eden Heights residence. Do we have any other question as we wrap up the session? Do we have any other question? So while we're waiting for questions in the chat box, I want to say a very big thank you again. I want to say a very big okay. So Alfred is saying, what do you mean by carcass level? Is it not completed building without the contents? Okay, yes. So when we say carcass level, I'm talking about the interior. So we finish the exterior of the building, all the structural works, the uniformity of the exterior, all the electrical works, and all of those things. We take care of them. Then our investors design the interior to the way they want. You understand? So they design the interior from the kind of tiles that they put on it, the kind of kitchen cabinets that they will put, the kind of POP that they will install, and all of those things is now taken care of by the client. Now, why did we come up with this? We discovered that in the first phase of the project that we did, some of the interiors that we did, the clients redesigned it to their taste. Not like it wasn't good, because we are very we are focused on delivering quality, right? So we did quality things, and when the investors came, they redesigned the model of the interior to their taste. So that's more like wastage of finances. You get? That's more like wastage of finances. So instead of us developing the inside, doing the interior to the way we've designed the interior to be, and then clients coming to restructure it, is better we sell it to them at that level so that they can come and finish it up, choose the kind of tires that they want to put, choose the kind of POP they want to install, and all of those. But if you want us to handle that, of course we can as well handle that for you. Then we'll come to terms of conversations and all that. But I hope I was able to answer your question on that, Alfred. Does that answer your question? Okay, I want to believe that answers Alfred's question. But if that doesn't answer your question, you can send me a message on WhatsApp via the number showing on the chat box, and then we will take it up from there. So I want to say a very big thank you to every single one of you for joining in the session. It's been a great time discussing real estate investment, how to build the right investment portfolio, and all that. I remember at the early stages of the session, I mentioned to us that beyond beyond just having the knowledge, beyond just having the knowledge, it's important, very important, that every single thing you've learned today, you start implementing it, especially the portfolio part. As a young person, take up that portfolio and then look at the assets that you have. If you have a asset, look at one of the assets that you have, and then put it under each of the asset classes that are there. Is this growth asset? Is this income asset? Is this preservation asset? Look at it and then classify it around that. Then for those people looking at investing in real estate, what you want to do is to look at that portfolio again and say, okay, where do I want to start with? And then you look at properties within that range, just like the ones that I've mentioned: Harmony Hills, Rootland Farms and Resorts, Eden Heights, or Goldmark Residence. You look at these asset classes and then say, okay, this is where I want to start out this particular investment and all that. And if you need further clarity, further conversation, further consultation, or a close guide, you need me to guide you um, on a much more closer level on how you can achieve your real estate investments in 2026, of course, reach out to me, send me a DM, take it up from there. I'll guide you on the right ways you can invest correctly in real estate in 2026. This is not a year to start doing real estate anyhow. You get my point? This is not a year to start doing real estate anyhow. It is a year to structure your investment in the right direction. It's a year to put good structure to your investment. It's a year to put good levels to your investment. If it's land you're buying, let there be structure around it. If it's house you're buying, let there be structure around it. You're not just buying out of impulse. You're not just buying because you want to own, but now you are buying for um for structure and profitability, because these are the core competencies of any real estate that you have: the structure around it and the profitability of that project. These are the two major things that forms up the core part of your real estate investment. I want to say a very big thank you to every one of you for joining in the session. It's been an amazing time. It's been an amazing ride with you all. And if you have any questions, any further questions, you can reach out to me and I'll take it up from there. So for now, I want to hope and I want to believe that you've learned something very valuable and you'll be implementing. So thank you so much for joining the session today. I wish you all an amazing 2026. I wish you all a great 2026. Have a lovely day. Bye, everyone. Cheers to greatness. I can see all the comments. It's really amazing. Thank you so much. Thank you so much. I am grateful. Thank you so much. Have a great time.